Is it even possible to save money in 2024? I mean, seriously, the Fed's created all kinds of money
in the past few years.
Yeah, inflation is going up. Eggs cost, I don't know how much. I can't even
Well, we
remember.
keep having these different items pop up and be more or less. Yeah.
Yeah. So how do we save money, and should we, or what?
Is it even possible?
Yeah. So today we're going to talk about that. We are going to kind of resurrect an episode that we did back in the day before COVID.
Yeah.
And say what's changed since then.
Right. Our most popular episode of all time was in 2019 with the same title, How to Save Money. But times have changed. It's 2024, 5 years later.
Changed. It's been weird.
What do we say now? Hi, and welcome to the Wealth Wisdom Financial Podcast, where we believe when conventional financial thinking doesn't get you where you want to go, you need wealth wisdom. Hit that subscribe button so you never miss an episode. And if you're watching on YouTube, give this video a like, hit the bell so you get notifications. Comments are open. We want to hear from you. What are you finding difficult about saving money these days? What inflation are you seeing in your life? What's your experience like this year? Share it in the comments. We want to hear.
And here's the thing. I can go on YouTube and see all of these clipping coupons, how to save money things, videos of people's fingernails.
Their grocery haul.
Yeah, the grocery, all that stuff. I'm like, oh my gosh. What we really want to do is not just say, hey, what we're doing, but how's it working, and some stats to prove what we're doing.
Yeah, because this idea of saving money has two sides to it. One is, how do you spend less on the same things? And the other is, how do you set aside money so that you're able to afford those big expenses without going into debt? Mm-hmm. You're able to maybe retire one day, get through an emergency, all of those things. If you're joining us, you're looking for those clipping the coupon things and how to save money on your purchases.
You probably won't find it here, but you will learn a lot of other great things.
What I was going to say is that that's good, but that's not how you build wealth. Mm-hmm. How you build wealth is the other way. To set aside money, pay yourself first, have money that you don't touch for a while. And that helps you avoid debt and all those kind of things. So that's what we're going to talk about today. If you figure that out, maybe the clipping the coupons isn't needed, or it actually helps you do this one even better.
Yep.
Not saying, there's anything wrong with that. Just saying you got to put priorities where priorities are. So why save money? I've got some charts for you today. Yes, I love charts. You ready to see these?
Oh, I am. I mean, literally, there's so many great, good charts to see, and it's a little scary.
Yeah, here we go. Okay, here we go. This is the Federal Reserve economic data. This is a chart that is the personal savings rate. How much are Americans saving? And you'll see this goes all the way back to 1959. And we had this one point in time here in 1975 of May, where we got up to, you might have to help me fill in some of these numbers as we go here, Brandon, 17.3%. And that stayed America's personal savings record for a long time until
there was
April of 2020.
Something big happened, yeah.
Yeah.
I do love that they call it Fred. By the way.
Yeah, Fred. He's our friend, Fred. We look at Fred a lot.
Kind of. I don't really want to look at it, Fred, too much.
Now, what was happening back in 1975? Well, you see these gray areas. These are all recessions. And that recession, I wasn't alive then, but I hear there was high unemployment and high inflation at the same time. It was a time that we haven't experienced nothing quite like that since. The gas lines, all the things.
Yeah.
Well, no, there was high unemployment and high inflation combined, right? And we won't get into the debate about that. So kind of makes sense that Americans would be like, hey, we just lived through a really hard time. I'm employed now. I'm going to save some money in case we hit another really hard time. And you'll notice if you try to look at the trends here, that it often goes up during those times of recessions or just after, right?
Yeah.
So I'm kind of, marking on here a little bit, like when they go up. And there was this little gray there in 2020, but then there was also those payments that we all got from the federal government that a lot of people saved. So that's why you see it
And
up and
spent.
down. Yeah.
And spent, both, you'll
Yeah.
see.
Yeah. Now let's look at when there were the lows. So I found the lowest point here in July of 2005, 1.5% savings rate. That was a long time right after the dot-com crash happened.
Yep.
There's another low before then that was quite a while after the recession in the early 80s. And of course, now we're in the 2021 to 2023, we've gone back down to kind of a normal rate or a low rate historically. As of December 2023, we were at 3.7%. Remember that number? 3.7% in December
And it was really high in April, like, because people.
of 2020.
Yeah, people were scared that at that point. I mean, I know I was like, hey, let's put it in the mattress or something.
And it's no secret that Americans save less than we did in the past, right? We're not in these high rates up here in the 10s to 15. We've been, since 1990 below 10 for the most part. And there's various explanations for this cause. Some people think it's because wages have been so low, or inflation has been so high, or we're just told we got to consume to keep the economy going, and marketers are getting better at getting us to spend our money. We're not here to debate the causes of why we have such a low personal savings rate. What we want to talk about is the effect this has.
Yeah.
Because we see every day people who live their lives and how they have to live their lives because of this low personal savings rate on average. And we see the people who are buck the average, both positive and negative. They're not saving at all, or they're saving more than the average, and the impact that has on them too.
And I do think sometimes as we go through this, that there's people who want to save, but they've been in the system, student debt, credit card debt, car loan,
we're gonna
all
get to
kinds of
that.
stuff. So,
Yeah. Stick around. We're gonna get to how to save soon. We're talking about why save right now. Let's talk about the flip side. We're gonna share another chart. This one is the consumer debt service payments as a percent of disposable personal income. This does not include mortgages. It's only other debt, consumer debt. And you notice it goes up and down and all around, but I wanted to focus in on, at the end here, Q3 2023, and it says it right here, 5.78% is how much of our disposable income is going to debt. That includes car loans, credit cards, student loans, personal loans, all the things.
5%.
Yeah. And remember that 3.7?
Mm-hmm.
That's like 1.5 times the amount we're spending on consumer debt than we're saving.
Yeah.
That's bananas.
And I think, again, that goes to averages. There's people who are spending, and they know, this, it's way higher for you. And some people are like, yeah, those, I have zero.
Right. Yeah. And some people don't have any disposable income, right, that they feel, but if they have this debt, that might be counted as part of their disposable income in this chart, at least.
Yep.
Now, there's a crisis that is not getting a lot of talk. People have been talking about the student debt crisis, but there's another one that I haven't seen talked about anywhere. If you've seen it talked about, I want your comments below. In major, main media. I found some places that are not necessarily going to be your mainstream media that show this crisis in some real numbers, and I want to share with you. You ready for this?
Drum roll, please.
Okay, this is data from lendingtree.com, and they are talking about auto loans here. And I'm just going to scroll down here, look at some of the data, make sure I remember all the things I want to point out to you. Okay, so here's the average auto loan, the amounts. And you can see they range from $20,000 to $40,000. Depending on if you're buying used or new, depending on your credit score. If you have a higher credit score, you might be buying a more expensive car. Have a bigger loan out on your cards. Now let's look at how much people owe in auto loan debt. Look at how much this is going up. It's now at 1.595 trillion. Now, what does that mean?
1.595, that's a lot of money.
Yeah, so this is the total debt by percentage. You'll notice mortgages 70%, right? You might expect, but look at this, 9.2 and 9.2. Those are auto loans and student loans. In fact, student loans only edge out by 1.599 compared to 1.595. Why are we not talking about an auto loan crisis here, people? Right? Like, am I being ridiculous?
I mean, I know it's going up and it says that in there that it's moving and trending above the student loan crisis.
Yeah, it could totally explode, especially as people get those loans out. And here's the big deal. I buried the lead here for all you media market journalism people. I buried the lead. This is back up here. I got to go back up. This one is from NerdWallet, and they have a nice little chart here that shows the average car loan interest rates. And this is the scary part for me. Look at this. You could be 5.61, maybe comparable to a student loan if you're buying a new car and you've got a really great credit score. But look at how much it could be if you have a bad credit score and you're buying a used car.
21%.
That's like credit card interest rates.
Yep.
Is that usury? Like unfair interest? I don't know. Like, why are we not talking about this? Why are we paying these rates? What's going on?
Well, and I remember whenever we went and got our second car, which we had to get, right, because of having a 5-year-old, we the average rates on the form is like 10%, and this was with really good credit. I was like, wow, that's interesting that it was 2.5 or less 2 years ago, and now it's 10% now.
Yeah. So let's go back to this why save. I'm going to stop the screen share. So why save? And we'll get to how. Because saving money keeps you from going into debt, whether it be for your next car or because you have a major medical bill or because you lose your job or your kid needs braces or someone decides to go to college or all the kinds of different large expenses that come up in life. And again, saving is going to be different than like investing in a 401k. You don't save in a 401k. You set aside money for a financial future there, but you don't have access to that money without penalty until you're 59 and a half.
Yeah.
We're talking about something categorically different to save money. So how do you do this?
And again, saving in a 401k is not saving, it's investing. I mean, again, that is a investment vehicle, not a savings vehicle.
Mm-hmm.
As much as we want to say it, they call it a 529 savings plan, but it's not.
Right, for college, yeah.
Yeah.
Because you can't tap into that 529 when you want to go buy that next car.
Yeah.
Or even for your kids' braces, right? It's for a specific purpose. So how to save? First of all, it really helps a lot to tap into your why. Let's channel some Simon Sinek. You got to know your why. Even when it comes to savings, why are you saving? What are you saving for? What's important about saving to you? That has to be a little more robust than I'm just saving for my next car.
Yeah.
You got to tap into some emotions. You got to think about what happens when you're 95, those kind of things. We actually have a tool to help you do more of how do you discover your why. We like to call it setting your sights. What are you looking for? Where are you aiming? You want to talk about the tool we have?
Yeah, so because of doing this for several years, we've learned a lot of times that people haven't set their sights. They don't know where they're going and they're just kind of sleepwalking through life, right? If that's you, hey, wake up. So what we did is we created a interactive money journal. You can see it here, 5 smooth stones, there you go. It is an interactive money journal where we help you ask the right questions so you can set your sights. Because then if you have a goal and you know kind of what you want to accomplish, you're going to be able to say, I don't know, no to the marketers that are telling you, you know what you need to do. You need to just go buy that
new vehicle,
new vehicle that you can't afford anyway, because, you know, it's great.
Yeah. Now, after you know your why, where do you start? Some people jumped way too quickly into saving and they give up because it just becomes way too hard. If you're not saving anything today, we love to suggest try 1%. Whatever you're living on, 100%, if you're not going to miss 1% of it. If it's $100, you're not going to miss $1. If it's $100,000, you're not going to miss $1,000. Start with 1%, start moving it to a savings account that you're not going to touch, a high yield savings, a whole life and high cash value, properly designed, bank on yourself type whole life policy. Start moving 1% somewhere. And then that's going to start building that habit, building that muscle. Don't try to jump to 10% all of a sudden. Start moving about 1 to 3% per quarter. So first you're going to find your why, then you're going to start with 1%, then you're going to start increasing from 1% to 2% to 3%, and you're going to do it slowly, moving 1 to 3% per quarter. And then you're going to find that there are times that you get a pay raise, you start earning more revenue in your business, you figure out a new, customer base to tap into, you raise the rents on your rental properties, or you get some kind of windfall.
Yep.
While you're waiting for those things to happen, or while you're actively trying to make those happen, go ahead and pre-decide what you're going to do with those funds when you get them. Decide what percentage of them can you save. If you're getting a 3% raise, could you go ahead and start saving 2% of that and only increase your living expenses by 1%?
Yep.
Could you maybe save all 3%? Or if you're getting a windfall, what if you saved half of it? Or what if you saved all of it? Instead of just going and, taking that big trip or buying that new flat screen TV or whatever it is. So decide in advance what you're going to do. And what I've found is when people know what they're going to do with that next increase or windfall, they often get the next increase of the windfall. There's something happening where they know what they want their money to do for them. When they get more of it, they start getting more of it. And maybe it's the clarity that they have. Maybe there's some universe doing something crazy there. I don't care, but maybe you'll find that true for you too.
And the fifth thing is never breaking compound interest. The reason that I love the banking yourself concept, the infinite banking concept, is how we pay for things really matters, right? Again, buying that car, the banks love that we're doing this. And what I've heard and said a lot of times is don't do what the banks tell you to do what the banks do. So understanding we're all in the banking business, they want your money. They're going to say, you need that car. Go ahead and get it. And here's your cost, right? Same with the mortgage, same with anything. And we wonder why people are in debt. It's because we're told that. But how we finance things really matters. And if we learn to be a saver and then wait a little bit and then buy the thing, that's really, really powerful. And the best place to save, in my opinion, is using this policy, whole life insurance policy that I can then use. And then as Nelson Nash, the founder of Infinite Banking, says, don't steal the peas from your own grocery store. You start paying yourself back, which increases your savings rate because it's a lower interest, and it just compounds and compounds and compounds, and it builds.
Yeah, so that's number 5, is never break compounding interest. And the only place we've found where you can still use your money to buy things without paying the opportunity cost to use it is in a properly designed bank on yourself type whole life policy. Unless you want to take a lot of risk, then there's other ways. If you know something better, please let us know. Now, if you want to learn more about what that looks like and how it could help you increase your personal savings rate, have cash available so you're not dependent on the banks and they have less control over your purchases and how much interest you pay. And also you're not losing the growth of your money when you do take it out of to go, buy something, those kind of things. We want to give you a tool to help you learn more. We've gotten rave reviews over this tool. We should have brought it in here. Okay, it is called the 5 Simple Steps to Secure Your Financial Future Outside of a W-2, a special report written by yours truly. And we've gotten rave reviews on this. It's really simple, 20 pages, including, it starts page 1 right there in the beginning. You're going to learn not only my love for acronyms, but also more about how you can build a better financial future potentially in 5 simple steps. Nothing super heavy here. We have copies of these, but you can also get a download of this. It's at wealthwisdomfp.com/report. And this is going to really walk you through a little bit more about how to save money page 9 has some really great things about bringing calm to financial chaos that I think you'll really enjoy.
Yeah, and again, looking at that report, it just helps you make the right decisions. So that way, when chaos comes, you're able to overcome that, right? And that's what's happened for us. Chaos does come. I mean, I have a 5-year-old. But how do I overcome
Hey, I do
that?
too.
Yeah, right.
Sorry.
So how do we
distracted you?
how do we overcome that? And it's by having that pre-decision, putting it through. And then the other thing is I'm nowhere close to 60 yet. So how do I have access to grow my wealth, building a good foundation to be able to do the things I want to do now and later?
Yeah, so let's go back to the top of the episode. Is it impossible to save money now? Well, we just saw, what was it, 5-point-something%
Yeah.
of disposable income going to personal consumer debt.
I think it's even higher. I think some of it's hidden. I don't know. I feel like as I talk.
Well,
to some
that's
clients-
average,
Yeah.
right? Some people have a lot more, right? That's the average. Averages don't really matter.
Yep.
But imagine whatever your percentage today going to credit cards, car loans, student loans, personal loans, lines of credit, whatever medical debt, whatever kind of debt you have. What if you could get that out of your life forever? Do you think you could save more?
Yeah.
Yeah, I would hope so. And do you think by saving more, you could have a brighter, more stable financial future? I totally think so. And that's exactly what we love to help people do. So get this report, learn more about our best advice, our best recommendations for how to pursue that, things that you're not going to find at your oh so average financial advisor. We put in here, like the things that they wouldn't tell you. So go get that. And be sure you subscribe to this podcast so you don't miss future episodes. We're going to be going back and redoing some of our favorite episodes from the past, as well as intermingling some new things that we want to make sure you get to empower your financial future. Those timeless, groundbreaking financial roots that we think everybody should have. And that starts with how to save money.
Right. So the topics presented in this podcast are for general information only and not for the purpose of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation. And on top of that, just make sure you are putting a little bit aside. The richest
Or a lot.
A lot. The richest man in Babylon, 10% of all you earn is for you to keep. Great thing to move towards. So.
Oh, that's a good point. I was talking to somebody recently who's saving 30% of their income, and they're like, I feel like I could be doing more. They want to save 50% of their income. If that's you, we want to talk to you too. I'm super excited to help that person go from 30% to 50%. And that's going to be expanding their income, doing a couple things differently to get the banks out of their lives. It's the same kind of things, just on a different scale.
Yep. Cool.
Okay, live long and profit.